Hey, what's going on? Welcome to Options Basics. This video is designed to be an overview of what is a contract, what is an option, how do they work, and how we can use them to profit in the market. Now, I do recommend before you get involved with options to understand how common shares work and how to trade them, because the way options move is derived from the way that a stock moves. So if you're not sure on how the stock moves and not sure how to trade a stock, and then it becomes very difficult to learn options. The purpose of this video is going to be to cover the basics of the options contract. That's going to be the foundational principles of the way these options work. So it's important to get this part down packed because everything else relies on that. Throughout the series, I am going to avoid reading the slides word by word because it's not going to be the most effective use of our time. If you want to take notes or screenshot the video, feel free to hit pause and do so. All right, so let's get into the fun stuff. So an option gives somebody the right to either buy shares at a certain price by a certain date, or it gives someone the right to sell shares at a certain price by a certain date. Let's say there's a home I want to buy and the current value is $100,000. And I believe the price of the home is going to go higher over the next year. As an option buyer, I'm going to offer the seller $10,000 for the right, but not the obligation, to purchase their home for $120,000 within 1 year. So 6 months has gone by, and now the value of the home is $160,000. At this point, I have two choices. I can buy the home at $120,000 or sell the option to another option buyer. Let's take a look at scenario 1 if I decide to purchase the home. So in this example, I paid $10,000 for the option and $120,000 for the home. So my total investment is $130,000. However, the value of the home is now $160,000. So at the time of purchase, my net gain in equity is $30,000. Now, the main reason why I would purchase the home is I want to live in it, rent it out, or have some other plans for that property. Now, scenario 2 would be to sell the option to another buyer. Keep in mind, I purchased the option for $10,000 while the home was valued at $100,000. Now, since the home has increased to $160,000, my option value has now increased as well. So if the current value of the home is $160,000 and the option gives you the right to buy it at $120,000, the value of the option is now worth $40,000. So I paid $10,000, I sold it for $40,000, and my profit was $30,000 on that option. Now, since I sold the option, the new option buyer now has the right, but not the obligation, to purchase that home at $120,000. All right, so I know that example might have been a little bit stretched out, but I needed to make a point as to what the option contract allows you to do. Now we're going to go into the contract specifications and what different variables there are. So in this case, we have the underlying stock. In our previous example that we were just discussing is the home. In this case, with options, we're talking about stocks. So it could be any stock, Apple, Facebook, Microsoft, doesn't matter. Now, the type is a call or a put. Now, to keep it simple, the call, I believe that the value is going to go higher over time. If I buy a put, I believe the value is going to go lower over time. And you can profit on either scenario if you are on the right side of the trade. So if you buy the call and the value goes up, you're in profit. If you buy the put and the value goes down, you're in profit as well. So you can make money on both sides of the equation. The other variable is the strike price. In our home example, the strike price was $120,000. That was what I could buy the home for. In this case, it could be a share price. Expiration date, again, in the home example, the expiration date was 1 year from the day of purchase. Now, when you're looking at options, there's expiration dates every single week. So the shorter the expiration, the more risk you're taking on because you're betting the price to be at a certain level by a certain time. Now, the longer amount of time that you give an option, 3 months, 6 months, 1 year, 2 years, that gives you a higher probability for the price to go in your favor. Price is simply what is the option valued at the time. So When I bought the option for the home, it was a $10,000 option. And size means how many units are involved. In the home example, it's just one home. In the stock market, every option represents control of 100 shares. So there's more leverage built into options. We're going to go over all of that as we move along, but these are the contract specifications. Every option contract has all of these factors built into it. So just like stocks, there's a market of buyers and sellers for options, and the price of the option will fluctuate based on what the stock is doing. If we relate it back to the home example, the price of the option will fluctuate based on what the home value is doing. So why trade options? There's many different reasons why you can use options, which is why I'm so fascinated by them, because they could be used to manage risk, they could be used to enhance profits, they can be used to provide protection to your portfolio. There's so many ways options can be used in a portfolio, whether it's just for trading or for investing as well. Options are very versatile, and that's why I love them so much, because you can make a strategy as risky or as conservative as you like, and you can tailor it to your specific strategy and skills. There's so much to talk about. There's so much you can do with options. We are going to go more in depth on the next video. In the next video, we're going to be discussing call options. So anytime you buy a call option, it's normally when you believe that the stock is going higher. So we're going to get into all that stuff. This was the introduction, the basic concepts, and the different specifications that make up an option contract. We're going to go deeper, more examples, and we're going to relate them to actual trading and investing scenarios. If you got value from this video, please like and subscribe. Let me know your thoughts, and I'll see you in the next one.